All right, folks. Here, let me just turn that off. Okay, so I'm letting this. This is Red Ben, by the way. I forgot to put my contact info up. This is how you get a hold of me on Twitter. It's at Red Ben Trader. If you want to learn more about the room I trade in or the algo, email my coach, trade letter N, word perform at gmail.com. Okay. So I've been in a short, and I'm trying to decide whether or not I want to leave it on or not. Um, it, I still have two runners, and I don't love the idea of giving some back, but I don't really have a clear reason to exit. So my process says stay short until you have a reason to exit, but I could get one here soon. I'm not planning on live trading. Oh, sorry, cat. I'm not planning on doing a lot of live trading unless we get a lot of action. What I really wanted to do is actually more of like a journal entry for myself. I'm working on a new indicator, which is this one down here, the lower indicator. It's got a line and then these little yellow and blue rectangles, those little strikes or whatever you want to call them, bars. For now, it'll probably change how it looks. It's really early in testing. I don't know if this is how I want it displayed, or if I want it to overlay on the bars to tell me when certain like situations are occurring. But sometimes the only way to really find the best patterns for an indicator is just to kind of like look at some of the raw signals and just visually identify what happens when certain conditions are true or certain conditions change. Um, you can you can sometimes find some pretty cool patterns, and so I wanted to share what I've found so far. I've only been using this for like 4 days, maybe. And in those 4 days, I've actually changed the formulas. So realistically, in its current state, I've only been using it for 2 days. I messed around with it a bit more yesterday, Wednesday, and kind of learned what not to do, which is usually how it goes when it's something new. You right away think you totally get it, but especially when you build it, right? Like I knew what I intended it to do, um, which was to help me like I got a lot of things on here now, quite a few that tell me whether or not one side has momentum or the other, like whether or not I should be trading continuation or mean reversion, going with the trend or counter trend, for instance. A lot of my indicators that I've added, that from, so this is the trade and perform indicator, where like that's like the skeleton of my indicator. My indicator is this minus a few things plus a bunch of other stuff. Um, and so the bunch of other stuff, many of those are visual signals for me to identify, like I said, whether or not I should be trading bullish or bearish, or whether or not I should be using strategy A or strategy B. And then the trading perform signals are primarily for triggering me into entries, once that bar closes, or once we close above or below a certain location in the bar with the signal. But realize that all of these signals are only valid after the bar closes. So like right now, while I can see all of the things on this bar, like that little plus, and the fact that it's white, and that white triangle, and this blue rectangle here, and the white here, we don't really know what those are going to be for sure until it closes. Some of them, like the white background here, are actually overlaid from a different chart. So those we may know earlier, but we also may know slightly later. So on another, you can't see it, but on another, hi cat, on another, he feels ignored, screen here, I have a chart, a numbers bars chart, like a profile, I'm sorry, a footprint that has additional signals. And so like these colors here are getting overlaid onto here. So these ones become valid when this bar prints, which may not align with when this bar prints. So if you see signals or colors or whatever, like coming, like repainting, like showing up and then disappearing or whatever, it's either because you're looking at the current bar, which isn't valid until it closes, or those few examples of and same with these little orange things here, and then the green ones, which look like this. That's also overlaid. So the overlaid ones, and the lines too. These lines here are also overlaid. So some of those, the timing is not exactly the same. So just realize that if you see it over painting, it's not a problem. It doesn't interfere with my reading the market, because I know, or making a decision, because I know that I can't. None of these signals are valid until the bar that the signal's associated with closes. When it's a live bar, it doesn't matter what it says. Now it might warn me a little bit, like here, seeing the plus. If I have a setup that requires the plus to be an entry, I know that plus would fire and be valid if we cross 12,406.50. So I could prepare on my, I could get like, my like order book out, and like I could put a stop order at 12,406.75 or something, if that's what I was waiting. So it is nice having the warning, but realize that it's not an entry until the bar closes, which means if you're not ready with it, you may not get that exact price, or maybe you'll get a pullback entry. But what we're going to do today is, like I said, I'm going to go through this. We're going to talk about this indicator in the middle that's brand new, and we're going to go back and look at some scenarios. And I just want you to realize that, because we're looking in the past, and we're not going to be looking at the present like this, all of the information is already obviously going to be there. This might seem obvious, but for a lot of people, like you forget this when you're reviewing a strategy. In the live situation, you don't know for sure that this signal or whatever is going to print until that bar closes. So it may look relatively obvious, in retrospect that like, oh, that's exactly where I want to get long, but you wouldn't have known that until the moment it closes. So, and then from that point, you can make that determination. So, for instance, I already know this bar here, that those signals are not going to disappear. So, if that was my entry, I could be entering any time now. But if it's the plus, I need to wait until that bar closes. So that's a really important thing to understand. So okay, that being said, I guess I should just get out of this short, huh? I don't want to be. I mean, I do have a stop on it, but it would be frustrating to like take a full stop if I'm not really watching it very closely. Um, yeah. So my line in the sand basically for the stop for the short is up here above this flag. These little purple flags are called apexes, and it's basically the swing high on this tiny little time frame. If we get above that, it's probably going to especially this pink line at like 12,417. It's probably going to rip up a bit. If it can't get above that, the trend will just continue. So I mean, I guess it's not the end of the world if I take a stop. So probably the best thing to do is just to leave it alone because I don't really have a reason to get out of it. And that's technically the rule. So we'll leave it alone. Okay, so this indicator, I've got it. This is the 24 tick Renko chart of NQ, and this is the 15 tick Renko chart of NQ, by the way. So the information is the same. It's just that this is like faster Renko chart. So these bricks will print if you get 15 ticks going in the same direction as the brick before it, or block, whatever you want to call it. So you'll get more information. It's almost like a zoomed in time frame, only it has nothing to do with time. It's just how far the market's moved since the last 15 ticks or since the last 24 ticks. And so you'll get more signals on the 15 tick, but you'll also have more noise. So oftentimes what I'll do is when I'm building a new signal, I'll look at least two, if not three or four different like quote unquote time frames, because they really, if it's a good signal, it really should work on all of them. It may not give you very good risk reward, but the phenomenon that if you find a real pattern, it should work pretty much everywhere. It may be slightly different if you go to a really big time frame, or because then you're dealing with things like the effects from month end or options expiration, right? So like if you have if you're going up to like something that you only get a bar or a candle every I don't know, every session, or even just like maybe like something that's similar like a 4-hour chart where you only have a few bars per session. Now your signals are going to work a little bit differently because the every bar is not necessarily created equal, because you've got like some bars that are during the regular trading hours and some bars that are in the after hours. And so with futures, it's better to, in my opinion, to start looking for something that works on a really nice and small time frame. And if it works there, it's leveraged anyway. You don't necessarily need something that's going to tell you where the market's going tomorrow. All you really need to know, in my opinion, is a consistent way to find out whether or not the next 10 points are going to be down or up. So if you can find a signal like that, it's probably worth more, in my opinion, than something that maybe works 30% of the time to tell you whether or not you're going to close above or below something like at the end of the week or tomorrow. I'd much rather have the signal that gives me a 60%, 65% probability that we're going to go up before we go down on a very small time frame. So that's what I'm building here. And again, we're going to let's just look at one time frame for the moment, and let me hide all the other drawings. Okay, I can't hide the other indicators, unfortunately, but what we're primarily going to look at is this one here. So it's the line that goes red when it's down and green when it's up. And then we've got what I'm going to call blue markers and the yellow markers. So I'm not going to go into detail on how this is made, but I'm going to tell you what it says, because I think it'll help demonstrate why the signal works the way it does. So what it is looking at in a mathematical way is I'm calling it the pressure point indicator. It's totally proprietary. I'm building it by putting other things together and changing settings and stuff like that. But what it's basically looking at is it's taking volume, and it's a derivative of volume. So it's saying here's the volume of this individual bar. Now let's compare it to like other bars volume, let's say, or maybe what we would expect the volume to be in this certain scenario. Um, and then it's going to tell me the line here, if it's going up or down, is basically telling me uh, is there more bullish momentum, or is there less volume bullish momentum? And the interesting thing is you'd think that because of that, that the easy way to trade it would be whenever it turns to red, you just sell it, and whenever it turns to green, you just buy it. And I wish it was that easy. It's not quite that simple because what really matters when it comes to trading isn't, like I said, whether or not it's just going up or down, but it's where can you risk from? Where do you know you're wrong? Because sure, I could, if I had like a 50-point stop or something crazy like that, I could just short every single time it turns red, and I'd be doing okay, right? Like short here and short here and short here and here, and that would be like, oh, that's a pretty cool signal. But the problem is to that's a really big stop if you want to be able to trade with size. So I really need a little bit more precise signal that gives me a stop less than 20 points. 20 points is basically as big as I can comfortably do, because every NQ point is $20 per contract, and I typically trade 2 or 3 contracts. So I'm not going to risk more than like $1,000 on a single trade. It's just not feasible for me. I mean, you could trade the micros maybe, but then I would never really psychologically be able to size up with that system. A system that had to risk $1,000 or more every single time I push the button. It's just too much for me. So rather than just selling every time it turns red and buying every time it turns green, and putting a stop, I don't know, at like a swing high up here or something like that. I mean, that sounds pretty cool, and it would probably work with options or with ETFs. Like I said, I need something a little tighter. So we are going to be primarily shorting when it turns red, and the buys are primarily going to occur when it turns green, but we need to be able to filter it further to determine whether or not this is the place to get long or short. And that's going to depend on where our pressure point is, which is why I call it the pressure point indicator. So and that's what these little blue and yellow markers are. So what they are telling me, those little blue and yellow ones, it's basically saying that the market is so heavy in one direction that it doesn't necessarily need additional help to keep the trend going. So, for instance, if here, we'll look right here. So this star bar right there, the bar with the star on it. Here, let me delete this line. This bar with the star on it. You can see that we don't have a marker here. See that? There's no yellow marker associated with that one here. Oops, here, right? So what that tells me is that that bar probably, first of all, has a significant amount of volume, and that also when we get another bar after it that has the yellow on it, it means that not only does this one probably have less volume than this one, which you could just see with the volume chart, but in addition, it's moving in such a way that I have evidence that it didn't need a lot of volume to do what it did. So, like, considering what typically is required to do this, this one, like it just kind of slid right through, right? So this one and then this one also had the yellow, so that one also just kind of slid right down. No real um, absorption of any selling. I don't want to go into too many details, but you could see it on the footprint. Let's just put it that way. Um, so they had an easy time going from this close to this close. Okay, and then something happened. See here, you have no yellow and no blue. See right here, an empty space, and at that empty space, you had a high, a relative high, swing high on the line. See how it came up right here, and then the next place it went was lower, right? So it rose into the indicator rose into this position from a place down here that had a yellow bar. It rose up and it didn't get a blue bar and it didn't get a yellow bar, right? It just has nothing. So that makes this bar right here very important. Very important. Because the fact that it closed bearish, despite the fact that basically bulls fought back, is what that's telling me. Oh, nice. I got filled on one of my targets. Let me just make sure I don't want to take the other one off. Hold on real quick. Getting paid is fun. I just got to take a look real fast at the... Whoops. Oh, sorry, guys. I don't want to mess with that. I want to take a look at the chart and make sure I've got my... Oh, wow. They might just come right down to my next target, huh? Let's get paid at the... Should we just do the VR level? 78.25. It probably goes further than that. Let's be honest. It's not just gonna stop because it hits the VR level. Not in a trend like this. We can probably get more than that. Let's see if we can do... Let me just see if I have any other spots down there. I mean, 55 would be freaking great. So let's see if we can do 70. We'll try for 70 and tempting to push further. No, let's do 70-50 and I'll be very happy with that if it wants to go to 70. Because that's another 18 points. You know what I mean? If it just goes straight to 70-50, I'll be very happy with that. So let's just leave it there for now. Can I trail my stop? I probably could. Let me trail my stop so we don't have to think about this. It really shouldn't print a bar that's not pink. That's not pink up here. So let's do... Let me think about this. Really, you definitely can't... We can't trade above this. 30. 12.430, there would be no doubt that something is wrong with the bear trend if we trade up here now. But I don't really want to put my stop that high. I don't need to know that I'm absolutely wrong. I'm not trying... I might just get paid right here anyway. I'm not necessarily trying to ride this to the low. I just wanted to get a piece of it because my entry is around there too. So I don't have excellent risk reward to continue too much further. So instead of putting it up here, kind of like where you like your stop to be when you enter the trade, what I think makes more sense is putting it like up here, because if it retakes this bar here, it's probably at least going to come back and test 415. So let's put it at like 407. I mean, I guess I could just get out too. That would work too. That's always a decent plan. Okay. 07 it is. Okay, so let's see if we can get another 15. We'll see. Where was I? So we were talking about this right here. So this, I said that this, or wait, was it the other one? No, it was this one. So this right here made me know that that bar was important, right? We're in a bear trend. We had some yellow markers as the line went down. The yellow line, or I'm sorry, the red line turned up, the indicator line turned up, and there was no more marker, no blue, no yellow, nothing, telling me that this bar, they fought over that range. That range here should be new resistance if it's bearish, and it is. So that can be your entry, which it was. And then we get a great sign for bears, which is another yellow bar. So remember, the reason why that's a good sign is because it's not necessarily an entry, but it means that this bar here, they easily pushed through it. So even though the bulls fought really hard here, and then their stop losses got hit, and basically they just got pummeled here. Now, what that tells me is that any retrace, I should be selling. Okay, and so that retrace occurs here. Okay, so that's my opportunity to sell. It actually turns green as sellers take profit, and you get some like natural buying in here. But I can be confident since I had this lift, and that level, that price level, is higher than I'm at now, right? Creating bearish divergence, if you're familiar with that concept. So this low is lower than, this high is lower than this high. So we have a higher high on the indicator, but we have a lower high on price, and it's bearish. So, which I have other ways of knowing. And you can just kind of see it with price going from the upper left to the bottom right. So once I got this, once I had this, I knew I could sell, but I want to sell at that level up there. This is my opportunity to do that. And then when I see the yellow come in, if I wasn't, for some reason, wasn't sure about selling the retrace, if I want to sell the breakdown, it's on the next yellow bar right here, because price easily pushed through that, meaning that if we retrace it, it will probably hold. Okay. So I know it's kind of fast, but I think it'll make sense when I show you some examples of what the pattern looks like then to sell in a downtrend. And then it's the exact opposite for the pattern to buy in an uptrend. So the pattern that we're basically looking for, and like I said, we can see this, we'll be able to see this in multiple situations if we look at downtrends. You might not catch the high this way. The high and the low will set up a little bit differently than this continuation trade that I'm explaining here, where you have the empty space here, identifying the pressure point. Here, 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 and here are all pressure points. So look, if I do the vertical line, okay, so here's one, right? Well, actually, this is one. See how this one's got yellow and this one's got yellow, this one doesn't? So pressure point, and then you have two of them here in a row, which is important, and we'll get back to that. So two of those, and then pressure point, two. See that? Okay, and then potentially pressure point. Nope, never mind. Then again, it's not valid until it closes, right? So that's why I wanted to have that talk before, because that it looks like it's repainting. It's just not done yet. It's not valid. Nothing matters till it closes. But it looks like this one will not be a pressure point at the time being. But if you look on all these ones with the green lines, the pressure points, any one of these, if you saw it, you wouldn't sell the close, right? You wouldn't just sell it. You would wait. You would have the indication, the signal, that a retrace can be sold, and your sell is probably on the next aggressive signal or a breakdown. Now this aggressive signal also was the pressure point, which is perfect, but a breakdown on a yellow bar underneath that is also good. So here we got the signal, right? And then we have the indicator of aggression, the X, and then the breakdown. So in each one of these, we have one entry here, or an entry here, or an add, and then entry here, and or here for the add, or just the late entry if you didn't get the signal here, but you got this one, you could enter there too. But I got the aggressive signal with the algo, so that helps. So now let's quickly talk about the ones with the 2. Okay, so those all had, it was one pressure point between 2 markers, right? So here, here, and here. So it's a little different when there are 2. So here, this one and this one, those were a group of 2 pressure points right next to each other, and then this one and this one. So what you'll see here, what you'll see with these, now again, I'm in beta testing, so I might find other things with this too, but what I have found so far is that not only can you immediately follow the trend when there's double like this, when there's 2 pressure points next to each other, this actually becomes a pivot, for instance, here. And so what I would expect if the market went higher is for them to do that. Okay, so like if the market came back to here, it could still reject. But what I don't know is if it gets through this one, is this one still valid? That I don't know. I do not know that. I'm gonna exit the short. I feel like I got a good piece of it, and I'm good with it. It probably does go lower, but I don't want to have to worry about it. So I'm out of the short. Just instinctually feel like, you know what, that's a pretty darn good move. So, and then plus I want to leave the area. Okay, so let's go find some more. And so I'm just not cherry picking right now. Let's go back to another place where it's bearish, and we'll do the same thing. Okay, and we'll see. So let's see where it started getting bearish. Started getting bearish. It's got to be bearish for this to really work how it's supposed to. And that's why I'm saying you might not catch the top. So here's where it starts to clearly get bearish, right? So let's take a look at where the pressure points are. Okay, pressure point right here, right? In addition, look, we have 1, 2 with no marker, right? So that is our pivot. So we have, it's basically this, and then this bar engulfs the first one. So this becomes our pivot. Now, I don't think we ever got back to there, did we? No. But that's where I would have been watching for a pivot. It basically just did it here on a small time frame. With the down, sometimes it just falls, right? But that's where I would expect the pivot. It's also, though, it also makes this a valid short because it was pivot followed by pressure point, right? And then remember, the breakdown on the yellow bar is the confirmation or add. If I didn't get the star on the pressure point, the second pressure point, I would take the entry here. But technically, that's the right entry. Okay, and so now let's do another one. So we got pressure point here, right? So remember, the way it works is not just sell all of them, because you could, but it's pretty aggressive. Instead, if you get a retracement of some kind after the pressure point, that's the location where you want to sell. And the reason it's the location you want to sell is because if they get over it, it's probably done. Okay, so that's my location. Now, this one never came back. You would have had to aggressively sell this pressure point. There's probably a way to know to do that, and that is with this double pivot. This pivot makes it better, I bet, to be aggressive here because it broke down, came back in, and rejected immediately. So I think that makes this purple bar even better to sell. And then nothing. So that, and then that would mean that this is a follow through, and probably not a sign. Like usually 2 purples in a row is a sign for me to slow down on the short, But I think in this case, because this one had a pressure point and there was a pivot above us that we just retested, this is probably the fact that this got a yellow bar means like buyers aren't even trying, you know. Okay, pressure point, right? No yellow, no blue. Okay, so a retest into that area is probably good to sell. There it is. Retest into there. Now that one's very, very brief. You could wait if you were like, yeah, I don't know, this is support, I don't really want to sell here. Wait for a retest and an actual aggressive signal. That's not a sell signal, right? I don't have a star or an X or a diamond or a dot or anything like that. So if I want to be conservative, I should wait for the sell signal, which we might not get. Okay, since we didn't get it, that would be the follow through entry. And then it just continues. Okay, now pivot, pressure point is here, right? So if we get a retest and a rejection out of that area with an aggressive signal, we should be shorting. Okay, it just falls away. Okay, here we go. So retest, let's see if, now that star is going in the wrong direction, right? But look, it's a pressure point. See that? So the fact that the bullish signal got a pressure point is interesting. Because now what you're going to see, I imagine, I don't remember exactly how this works, but that level could now act as a reversal bar. And so underneath this low is where you have to be really careful about shorting. So let's see what happens. All right. Do they even give us a signal or do they just lift it? They just lift it. And that makes sense. The pressure point just got, once you get over it with a bar that's not pink, that is no, it's no longer bearish, basically. And see, we actually got over this pressure point as well. So 2 pressure points got beat. And so I'm not in short every signal mode anymore. And you can see that we also we overcame those zones without setting up. So it's not a stop, it's just don't short. Or if you were short, you want to get out. Okay, there's your entry for the other one. Okay, so does that align or not? Yes, it does. So that's the pressure point that did not get overtaken. See that line right there? That's the high that had a pressure point up here. That did not get broken. And we got the signal in that location. So that one is shortable, as long as you still think it's bearish. If it's not bearish, it's going to probably immediately fail. That's your follow through if you want to be aggressive. I don't know if it works. Oh, it does. Cool. And see, no more pressure points. So sellers are having an easy time for the moment. Okay. Now that's interesting. Buyers are now having an easy time. Okay. So I forgot to point something out. There is a pivot here. See the pivot, right? 2 spots with nothing on it. So we're going to mark. It's this one and this one, right? So when we get a pivot point, what we know is that if price comes back in here and rejects out of there, it's probably bearish. So if you were short from up here, and remember that was, I didn't point this out before, but that was right after the pivot. So if you wanted to be conservative, you wait for the retest. Just like here, like I said, if you wanted to be conservative about this, you wait for this retest and you get a really good price. So when it comes back up, we expect this to reject and not break up here. But we need some kind of, I'm probably not just going to sell it as it rises. I'm going to need some kind of a rejection personally, because otherwise this could be the low. And that what the low would, if this is the low, what it will look like is it will break above here on a bar that's not pink. So let's see if it does. Nope, there's the rejection right there. So there's your bearish bar coming out of the pivot point, right? No aggressive signal, but there wasn't one here either. I don't think that retest often gets an aggressive signal because that's not really what the algo was built for. But sometimes it might. Okay, so notice these are both yellow. So I would probably only short this one because there's no pressure point here at all. So, but you are directly across from a pivot. Now remember, this was a pressure point, right? And we got above it. So what does that mean? It means that this area probably has buyers waiting to get long, most likely. So taking profits into this bar's range makes a lot of sense. And yeah, like I don't really want to be holding through all this. I'm just gonna take profit here, even if it continues lower later. Now, like I said, I don't know how many times this pressure point works. I'm sorry, pivot point works. I don't know, but here it worked clearly once and potentially twice with an aggressive signal. And this one is a pressure point. See that? No yellow, no blue. So that's kind of interesting. And then you get a follow through confirmation, right? Purple bar with yellow down here after a pressure point, just like this one. Oh, wait, I guess, yeah. Particularly right after a pressure point. I thought we had one like that. This one. No. This one. After a pressure point. It's this one. Follow through purple. Same thing. Follow through purple. Okay, so bearish. So see, they tried to hold, they tried to absorb. Buyers tried to absorb, but they ran into the pivot. Right? Now remember, this is a new pressure point, right? So what does that mean? It means if we were short, we can probably move our stop now because this pressure point needs to hold. We should not put a pink bar up here. I'm sorry, we should not put anything but a pink bar up there. A pink bar doesn't really count, but we really shouldn't put anything up there. Okay, so we get another pivot. So this was a pressure point. And then we get a second one, which means it's a pivot, right? So now I'm going to leave this on because I don't know how long they last. I'm curious. Okay. Now, something that I'll mention now is that the other thing you can look at here is at the highs and lows, the swing highs and lows of the actual indicator, it's very relevant whether or not you had a pressure point or not. Okay, when it's bearish, make sure I get this right because I get a little confused. When it's bearish, best case scenario is that your swing high on the indicator has a pressure point. And that hopefully should make sense. If you're bearish and you're looking to sell retests or retracements, and so since your entry tends to be on a pullback into the location of a pressure point, you want those pressure points to be at the point where buyers were running out of gas, right? Because remember, the line is like momentum of volume. So it's like how much work the buyers put in, if you will. And so we want that to be at the high water mark when the market turns, if we're bearish, right? So like, but the problem is we don't know it's the high water mark at the time, right? When it's this bar, you don't know that this is the high water mark. That's the way that things work. You don't know until the next bar doesn't go any higher, right? So you can't use the fact that a pivot is on the high water mark as an entry signal because you'd be a bar late. I mean, you could. It's just more aggressive because you're not going to get as good risk reward. Your stop is going to go up here, and your entry would have to go down here. So it's still like a 20-point stop, but it's more. I'd prefer like a 15-point stop. So it's not wrong. It's just a little more risky. But when we see that our pressure point aligned with the swing high of the indicator, it's confirmation that we're doing something right because that's the way it should work. So see on this one too, let me move this. On this one, the swing high of not of price, but of the indicator was here, right? So most of the momentum for bulls is put in right there. That's where bulls have the highest level of momentum. So we would have liked that to be the pressure point. It wasn't, right? Bulls actually took that rather easily. The pressure point developed as a double, as a pivot, and it started here, right? So whereas over here, the bulls had an easy time getting this one, right? And that's where the momentum happened to peak. But again, we didn't know that until here. But notice it was not a pressure point. So not necessarily an entry for a continuation trade. The reason we're not getting that alignment here is because it's not incredibly bearish at the moment. It is on a higher time frame, and if we went to a higher time frame, what we would find is that at the exact same spot, they're going to put the pressure point in at the swing high. See that? Here. I could erase these. So at this exact same point, the pressure point on the 40 tick is the swing high. Why? Because on the bigger time frame, it's bearish, right? It's not neutral. But on the smaller time frame, that exact same spot, which is right here, okay, this is a pressure point on the higher time frame, but notice it's not on this time frame. Cool, right? And like I said, that's a good example of where I explained that a good signal will have the same, not the same, it won't say the same thing. It won't be the exact, the timing won't be the same, but the concept should still work on any time frame. So on this smaller time frame, it's getting into a period of consolidation, and we're not getting the peaks of momentum aligning with the pressure points. And in fact, there's very few pressure points at all. It's just the pivot, and then you finally get the pressure point just before continuation. Okay? So, if people are super lost, tell me. I realize you don't know how to build the indicator and stuff like that, but I'm hoping that it'll still be helpful. Like I said in the beginning, I'm primarily doing this as a journal entry so that I don't forget how to read the damn thing. But if there's something I'm not being clear about, that's hanging you up, let me know. But okay, so next, so let's just do it again. So now we'll just keep going. So we have a pressure point here, right? This one here is a pressure point. Is all we know right now. But notice how much lower it is. Okay, so that right away means it's a little bit more vulnerable. We would prefer that our short signals come on the rollover of the momentum, right? We want to get into a trade short when buyers are exhausted. That's just the way trading works. So this and this look like pretty good entries, right? With the aggression signal and the follow through, the purple bar follow through. Those look like pretty good entries based on this indicator because it was a swing high. It's okay that it's a lower swing high. It's also a lower swing high on price. But now we get a pressure point here supposedly. But look how like it hasn't risen at all. It's like basically flatlined, right? Momentum is flatlined. There's very little buyer participation. Okay, it doesn't mean you can't short it. It's just that I probably want to pull back this time, even if it had a star on it. So it pulls back for a moment, and you now identify that this is actually a pivot, not just a pressure point. So which is great news for me because I wanted the retrace. So if I'm in a short, I'm going to look to take profits on anything lower than that, and then I want to retake the trade on a retest as long as it rejects from the area. So that's where I want to take profits. Notice this one's also part of the pivot, a very unusual 3-bar pivot. Okay, and there's where sellers no longer have to work very hard, is here. But they had to work really hard to make those bars bearish. But you can see that buyers didn't actually work very hard either. So what would that mean? Why would you have buyers not developing any momentum, yet sellers had to work had a relatively difficult time volume-wise pushing through there? You have to think about what that means. I'm not going to answer that question, but because I don't want you to
copy my indicator. But if you can find a way to tell you when that happens, look what it does for you. When you finally get the retest and sellers are no longer having to work very hard, it's probably going to reject out of there. I don't know if you get a second try, but you can see that now we get another pressure point, right? So this one, oops, here is a pressure point. So if I get a pullback into that range, followed by a sign of aggression, if this one would have had a star or something like that, maybe I could take it now. But look at the line. It has flatlined. So buyers are not even participating. Okay? So there's no way I would buy it. But realize that you're shorting in the hole now is what that basically means. Now buyers don't even have, or sellers don't have to work very hard. And look at how buying momentum is finally, or the momentum is finally going down a little bit. For a while, it was literally just flatlining. No one had to work at all in here. Price was just dropping on its own practically. Now, sellers are working a little bit harder, but not so much that we would expect a pivot to develop. And then all of a sudden, we get some profit taking, right? Notice down here that our last pressure point was this one, right? So our line in the sand for being bearish, like where we don't want to be bearish anymore, would basically be getting price above this dotted line here on a bar that's not pink, because if we break through this pivot point bar, it could then become support for a future push up. I don't know what the relevance is of this pivot being above us, since we have a new pressure point. I don't know yet. But this looks to me like profit taking. But what you have to think about is, the way I want to think about it is, if I am short, I have to be willing to hold my trade up to 12,560 or so, or I should be getting out, because that would be very natural to come back to the pressure point, right? We already know that's normal. So if that would be enough where I would suddenly want to impulsively exit my trade, I should just get out now. If giving back those 10 points would bother me, just exit, right? Because it's probably going to happen. So we do come back up. You can see that now buyers suddenly don't have to work very hard, and we have all this buying momentum. Why is that? It's because all of these guys who were short are finally having to take profits, and they're kind of squeezing each other out of there, and you're having some natural buying in there too. Now there's a pink bar, right? But notice no pivot points yet. And remember, if it's bearish, what should we see if it's going to be continuation? We should see the swing high be a pivot point. We don't know where the swing high is going to be, but we don't even have a pivot point yet. Now also notice that the last swing high is way back here, and we're already above that. So this is what we call hidden bearish divergence. It only is relevant when you're trading with the trend like this, but it basically means that that some sort of a dip is basically inevitable. We just don't know when. But they're not going to be able to push the market in a straight line much further than this. And as soon as we do see some weakness, we're going to very quickly figure out whether or not this trend is done or not. So there it is. So right on cue, see how this is the pivot point? And we got the aggressive signal. In fact, entry. So even without this new indicator, pink bar followed by an orange bar in a bearish scenario, I already knew that was a pattern. That's what we call a 2-bar setup. So that we already had that, but this adds confirmation because the location's perfect. It's aligned exactly with my pivot point. It's the first test back, so I can put my stop right up there, and I'm expecting the low to get tested if not broken. So you can see momentum just falls off a cliff. Sellers don't even have to work very hard. But note, we did not put, we got a new, we know this, it was confirmed as hidden bearish divergence, but note it is not a pivot point. Okay, not a pivot point. Remember what that means. It means usually when it's not a pivot point, Remember what it looks like? When the swing high is not a pivot point, it's usually consolidation, right? And the next pivot point is usually the breakdown. So for the moment, the indicator is reacting to this like it's consolidation. So let's see if it's right. Okay, but we get another pivot point, but we flatlined again. Okay, so is this one going to be a pivot? It is. Yet another pivot. Not surprisingly, we're getting a breakdown of the low. So there's our pivot. If we weren't short already, we want to be looking for a retrace into that range after it drops a little bit. If I am short, unless I had some reason to think that I could get lower, my natural reaction is going to be go ahead and take profits anywhere under that pivot point because it's probably going to retrace back to it eventually anyway. And my expected value on doing that's probably pretty good. So if I hadn't taken profits from here and I'm seeing this bar print, I'm taking profits. I don't have to get out of the trade, but I'm probably taking profits. We did get a little bit of a retrace, but that doesn't really count for me. I need an actual bar that prints up there with a wick. So now if we got to pull back into that area at an aggressive sign, I'd be ready to short out of there. Let's see if we get it. Perhaps they just fall away and don't use it. Yep, this looks like another pivot point. But we did get a really big wick. That's interesting. And it's starting to lift. Nope. Well, it is starting to lift. Okay, so now we're getting it to lift, but price is not lifting. What does that mean? It's absorption. Okay, buyers are putting in more volume, yet price is going lower. So they're in this wick. There are buyers in this wick, either sellers taking profits or buyers starting to develop positions, maybe on a longer time frame or something like that. But notice this one and this one are both, yet again, a pivot, not just a pressure point. Okay, so if I'm still short from up here, because I didn't really get a good signal here, if I've still got a contract or two, what do I want to do? I want to be taking profits if we go any lower. So that's probably my profit taking point. That's a natural spot to take some profits. And I'm wrong. I'm wrong. It's a 3-bar pivot. So I can go one more. There. That's my so that's where I really assume that any deeper than this, we're probably going to pull back anyway. Yeah. So that's pretty good exit strategy. Okay, so now we get yellow followed immediately by blue. So no pivot at the low of price, but look, we got a pivot at the low of the indicator. See that? So the pivot happened in the low of the indicator, but not the low of price. I have been finding that this is a lot of the times how it looks right before a reversal. So it's not a V reversal, but this can be the low. It's just that we often need to work through this pivot point and pull back. But getting the pivot point, it's not always the low, but I'm just saying getting the pivot point so near the price lower low and also on the indicator lower low. Oh, you know what? I might be wrong. Where's the indicator lower low? You know what? The lower low is here. So I'm wrong. It's not. The pivot point's not at the low of the indicator. It rose slightly right there. I'm just too far away from my screen to see it. So this is the true low of the indicator here. So I'm wrong. Never mind. It's just a pivot point that's very close to the price low. So it's probably it's potentially vulnerable to getting ripped through, because if we get price above this, on a non-pink bar, I definitely don't want to be short anymore. But I'm curious again what it does to have the second one up here. So let's see. Do we get a significant pullback? Okay, another pivot point develops here, right in line with this one. That's interesting. And there's our rip. Totally makes sense. Totally makes sense. So the pivot was vulnerable to being taken back because there was no okay, so when price moves easily like this, right? With the yellow or the blue indicators, when price moves easily like that, it's like it's confirmation that like, oh wait, let me see, how can I explain this? It's a little complicated. So like I said before, you expect the pivots or the pressure points to be, you expect them to hold if the trend continues, right? If it's still bearish, you would expect each one of these pivots and each one of these pressure points like this to hold at least on the first retrace. That's what bearish trends look like. And then once you get under them, okay, and you put in some easy movement here, it makes it a lot harder to get back there on the next lift. The buyers have to work harder to get through this than they do to get through this. But you should expect sellers to be waiting here for them, right? So when you have pivot or pressure point followed by like a block of these, like at least two, if not three, and even if they're yellow and blue, and then it's a pivot, what should happen is this area here, this area here, that was easy to move through, like, and consolidate during that time, that area should be hard to break through now, because it was easy to move through here. But if you put in another pressure point or another pivot, getting back through this should be very hard. So let's see, is that where they get stuck? Is it the last? See, so first you'd expect the pivot point to hold. It does not. That's a sign it might not be so bear. The momentum is decreasing. The bearish momentum is decreasing. Pivots and pressure points are no longer holding. This one was actually above the low of the indicator, so we sort of had a feel that it might happen, right? But the most recent pivot before the low of the indicator was actually this one here. And then above that, there was this block of easy movement that has become basically like a high volume node almost. Okay, so they don't even make it to this pivot. Wow. This one was a pressure point. This one was a pressure point. Pressure point, aggressive signal in that range, sell. And this one, the top of this pivot actually held more or less. Let's see. Pressure point. Right? So pull back into there should be sellable. So they looked like they were going to turn it. They took one pressure point. Or no, I'm sorry, they didn't. It was confusing because it's three. This was 3 bars long. They took 2 of them, and they couldn't develop above the 3rd one. That was it. So I'm wrong. They didn't take it. Okay, pivot. Right? They take the pivot. So I was curious about this. Okay, so look what happened. Let me erase all the lines. So the pivot here, right? If you look very closely, the top bar of this pivot held, right? But after buyers put in VPOC above that high, which is usually bullish, was my thinking. Is like, wow, that might actually continue after a pullback. The tricky part here is they developed another pressure point right here on the way down. See that? They developed another pressure point, and then the low of the indicator is right here, right? That's the low of the indicator. That level here is the low of the indicator. The indicator starts to rise, but price continues to go down, and they put in a pressure point, just like this one, right? Indicator up, pressure point, price lower. Then what happens with that? It looks like it may be easier to break through, or at least trade through, even if you don't stay above it. It may act less like a pressure point. basically, is what I'm saying, because you've already, the low is actually here. That's where most of the sellers put in momentum. So these guys are just like retail shorting in the hole and people capitulating. So retracing them might actually be way easier than a typical pressure point or pivot. So this guy here, this one, you probably don't want to short his range because it's the indicator's rising and price is falling. So instead what ends up happening is they retrace back to this pivot, which was 3 bars long. And remember what I said about the pivots, if you break down and you come back and you reject out of it, it's usually a pretty good sell, right? And they do it right here, but they put in another pivot, which is weird. And it looks to me like what ends up happening is they come back into this pivot here. You know, let me redraw this. And from a bullish standpoint, all of a sudden, this pressure point now, since we've overcame it, can become used by bulls. Remember, this one was also overcome, right? Bulls got above it, but they couldn't hold it. Now, what looks like a sell signal is coming right into potential new support. And that is why you get the bounce. But it doesn't last. Oh, maybe it does. Maybe it does. So here, look at this huge pivot, right? This whole area here. Up to that range, basically. That is, they're trying to put in a pivot there, right? So what that means is for buyers to continue, they need to develop volume up here, right? Just like sellers needed to develop volume below pivots to continue lower. But if we do go higher, this should become support, okay? This one then is a pivot as well. They just lined up a bunch of them. They get a pink bar above it. They get a real bar above it. Now this is tricky because this one was also a pressure point, so I'm not sure if that actually counts because you didn't get the VPOC above. Do they get stuck right here? Those bastards! Look at that! That's fucking awful. That is so cruel. So because they stacked these pivot points, it looks like it's the most recent one that needs to get broken to continue a trend, I think. Because if I remember correctly, we just keep going low. And so lower. So here, they looked like they had it, right? They rejected out of here, but got some volume sitting up there. But this guy ends up getting trapped. That sucks for buyers. It was so close. I didn't realize how close it was. Extend drawing. So that guy looks like starts to get trapped. They put a pivot in here, right? Pivot point. They break above it. Buyers think they got it. They bounced off the pivot point. Everything looks good. They develop a new one here to bounce off of. Everything looks good. Then suddenly they have to work really hard to push through this upper range. And look what the indicator does. It drops. Meaning that this is actually the high of the indicator. What does that mean? Just like this was the low of the indicator, where was that? Here. And when we went lower, what did I say? That these guys here are shorting in the hole or capitulating, right? Well, guess what? If you're going to make a pivot point and you break above them, but you then, but you can't, but the indicator is already turning, right? They're not putting any more momentum in, but they're putting price up there. They're advertising up here, but they're not actually getting any momentum up here. And you can see on the actual bars, the little dash is where all the volume is. That VPOC of this bar's range was underneath this high, I think. Make sure this is aligned correctly, but I'm pretty sure it is. Wow, look how close that is. So they couldn't quite save the guys that were trapped up here. They couldn't quite get these guys. Oops. Couldn't quite save these guys. They almost did. And the fact that they put in a pivot here, meaning they had to work really hard, and then they couldn't break out of it, probably means they're going to give it up. Wow. And that is what creates this. Is we had trap buyers, trap sellers, can't release the buyers, sellers get aggressive. And look, sellers didn't have to work very hard. Why? Because buyers knew they were fucked. So they're already letting go here, right? And look where the swing high was right here. That's the swing high of the indicator. All of the buyers got in right there. And they literally missed it by a couple points, right? They could have, they probably could have developed support here if they would have just put that volume a little higher. And then everybody doesn't give up on the way down. But since they couldn't, everybody gave up on the long side. Someone probably took some profits here. You can see that this is a pivot. So guess what? If we get a retrace and this is the retrace, so this is technically a sell. Yeah. Oh boy, that's cool. That's really neat. So if I didn't explain that one very well. This is a pivot point, right? They retrace. Not surprisingly, this is the low of the indicator. These guys capitulated a little bit, right? But it was a pivot point. They retrace, which is expected. Now, if we can aggressively take back this range and the trend is bearish, it's probably going lower. But look what happened at the highs. I forgot to point this out. The swing highs and swing lows were not pressure points. See, or the indicator swing low, not a pressure point. Why? Because it's probably consolidating. This swing high, not a pressure point. Why? Because it's probably consolidating. And then this swing low of the indicator, not a pressure point, because it's consolidating. Now, nobody knows how deep that consolidation is going to be. But what you'll see is and then I think this was the swing high just barely, and it's not a pressure point. This one here was a pressure point. And that was actually a pivot. So if we come back up to that level, we should probably sell it. I don't know if they do. No. We put it in another pivot, and then we get the signal here off that pivot. This becomes a big pivot. We get the signal here. Right? So if I draw these pivots out, just to make sure I'm being clear, it's the range of 1, 2, 3 bars in this case. So what I want is for it to break down and then come back up, retrace it, and aggressively reject, and then give me a yellow bar to confirm. Boom. So I mean, this helped me. That's how I passed my evaluation, by the way, today, because I was still, I had a losing day messing with this yesterday. And I missed. It's got some nuance to it to figure out how to learn how to read it correctly. But once I found that pattern, I'm just like, oh, I can just take the retraces, because I was trying to sell. I won't even get into it. It's embarrassing, but plus I don't want to confuse people. This is what works, right? This pattern does work. So let's see. Do we have a low yet? So I can show you what a low looks like. Nope. Probably not. We don't know yet. This could be the low. It could be. So we have a pivot point at the end, right? Indicating not consolidation. Could be bullish. Probably not. They came above the pivot point, right? Trying to trap sellers. But look, the next pivot or what's it called? Pressure point. In this case, it's a pivot because it's 2. Is right there. And while that one did already signal here, if it comes up here and rejects, I'm pretty sure, not 100%, but I'm pretty sure that's still good, particularly when you have hidden divergence, which will be confirmed once we close this bar bearish, because we don't know where this green line is going to be until the bar closes, remember? So this made a higher high on the indicator and appears to want to be peaking, but this was a lower high on price. So let's put, so we could probably even put a sell order at 12.390.25 basically. And if this bar closes to the bear side, it's probably going lower, assuming these pivots have more than a shelf life of longer than one. Now, the only problem with doing that is that you're then shorting right into this potential support. So of all the setups, it's probably least probable that it's going to break down through a pivot point. And I bet what probably happens, if I had to guess, is it might do something like this. Like a complex pullback or even bounce. Maybe. I don't know. So let's quickly go to some other place and let's do the opposite, right? Because if it works to the short side, it should work to the long side. So let's go back to like a trend. Remember, this really works well with the trend. I will show you what you see if you do this when it's not trending. But let me find a totally different day where we have a reasonably strong bull trend. Was Wednesday the crazy volatile day? Or was that Tuesday? I'd prefer it during market hours, just that way the volume's right. But as you can see, it works fine no matter what. Okay, balance. Okay, I mean, it's not much of a bullish trend, but it's good enough. Okay, so let's go back to where we know it's bullish. Because like I said, the lows and the highs. Oops, fuck. That's not what I meant to do. What did I do? There it is. I was like, where'd it go? Yeah, that I don't have not quite figured out. Every low and high is probably different, right? But I do know what it looks like during trends. So we know it's trending when it goes supernova, which basically means we close above a pivot. So that is the close above. So in Trade and Perform Room, we learned to take this 2-bar combo, purple bar star, and I can just get long there, and we're long, right? So that's nothing changes. Like that's still totally valid. It's also a head and shoulders trap back in. So all sorts of ways you can catch that low. We did. I remember this trade, but imagine that didn't set up. And let's see what we know about the from the indicator just from this. So we have a swing low down here on the indicator that was not a pivot point, indicating probably consolidation. Then we get a pivot point right here, and that is the pivot point that we end up bouncing off of, which makes sense. This one, interestingly, is also a pivot point, but note the high is here and here, the swing highs. So it's still, the volume is looking like it's momentum. I'm sorry, but volume looks like it's consolidation, but what we're going to see is it's going to change. So this, I assume, I haven't done this, but on this, I didn't have this indicator on Tuesday. It didn't look like this. I had it, but I've changed it. So this was also a pivot point, interestingly, and on the way up. So what you would expect if it's bullish, remember, is to pull back into these pivot points, test it, and come back with an aggressive signal, and then follow through with it. It should have a blue mark on it, if not on the aggressive signal, on the next one, right? And then we should start to see lows that do not have a yellow or blue marker, because if it's bullish, that's what we should expect. So we put in another pivot way at the high, which should make you kind of nervous, right? Because now, to be bullish, we need to break over that, pull back, and then bounce off of it. So let's see how it handles. Oh, notice the swing high is actually this bar. See that? That's the swing high. And so this is that capitulation situation here. So we probably need a pullback of some kind. Yep. Even that is cool. Okay, now this is a pivot point. This one. So now it's this one. And so if we can rip here, we should be good. There it goes. Notice the low is now confirmed. The swing low is a pivot. That's what we want. Okay, so that right there is our pivot point, and it's at the swing low. So if it looks bullish, so pullbacks into this rectangle should probably be bought. Right there. X right on the pullback. I mean, it's exactly the same. It's just the opposite. So like this one becomes a pivot. Right? Can't get a VPOC on a bearish bar underneath it. They come back with an aggressive signal. It goes higher. Any pullback into this area should be bought. This one is also a pivot here. So that whole range can be bought if they bounce it right there. That's a long. It's also a purple bar, green bar, which I already knew was a long. Highs have a blue marker, but the low the swing low of the indicator does not. That is bullish. Okay, this swing low did not get it. So I wonder if that means we're going to have a longer consolidation. Let's see. Okay, that was a pivot. That's interesting. That pink bar was a pivot. So we're just like stacking pivots. And like I said, I don't know how long they're good. Maybe not very long. Pull back into the pit right there. Diamond off of it. I'm pretty sure that's it. Yep. Oh, and it's a pivot. Huh. So more stacking pivots. So now I'll pull back to that. And there. In the pivot zone. Right? In this bar's range and this bar. Pink bar's range. Pink was a pivot. Right? White diamond was a pivot. There's our aggressive signal. And then this one also was a pivot. Here. Right? The low did get a yellow. So I wonder if it's going to start consolidating now. Yep. Cool. Makes sense. Oh, the high did not get a marker. Remember, that's not bullish. And it's a lower high too. Okay. We have not given up a pivot yet though, right? This itself is a pivot. So if you wanted to be aggressive, you could technically say, I think you need to break out of the pivot first and then come back. There. No indicator. Right there. That's gotta be it, right? That should be good. Let's see. Am I missing something? Pivot. That's good, right? No blue or yellow on the low. Yep. I was like, I think that's it. Oh, this was also a pivot, meaning we need to break above it. We only get above it with a pink bar. Oh, wow. Price goes down and the indicator goes higher. And it appears to have printed a pivot. I wonder if that's a problem. Because remember, we want the lows now to not have... We want the pivots to be on the lows during a bull move. And we want the easy time markers to be on the highs. We are going... It's a higher high. I don't know if it's the high of the... We don't know if it's the high of the rotation, but it's a higher high on price and the indicator. And there's... By the time they close it, I see that there's no blue marker, meaning that's now a new pivot. So we'd have to get higher than that and then pull back and bounce off of it to know where it's still bullish. And that's a little concerning. So let's see. Is that rightfully concerning or not? Do we come back into... This is all just pivots everywhere. This whole area has basically trap shorts. This produces a pivot and it's at the low. And that's usually bullish. Oh, this is a 2-bar pivot. Okay. And they are going to let this go, it looks like. But now let's see what happens with these pivots. Because here we did not break above the pivot. That was the first risk, like sign of risk, that we put a pivot at the top that we couldn't break over. And then we put a second one down here. Oh, but looking at it from the bearish perspective, they've now retested the pivot from below. Look, this one was a pivot, right? So we have to think about it from the bearish perspective too. bears broke down, came back in, and rejected with a sign of aggression. It's probably bearish. Because that hasn't happened yet. Okay, so now this one's a pivot here. So we're just going to get stuck in here. At this point, I would probably think it's probably not bullish anymore, personally, but let's see. Does it get stuck in between the pivots? That's what I want to know. This one becomes a pivot right here. If they go above, pull back, and bounce, it could be bullish. Oh, wow. Okay. Well, there's the answer. So even though we made a complex pullback here, and we had that pivot that did act as resistance, right? We got a new one down here. It was this bar and this bar. The low itself of the indicator was here. And it seems that that sets up potentials for reversals. Okay, so that was the low of the indicator. And then the very next bar was pink and a pivot. And so once we got above that pivot, if we pull back into it and give us, it didn't set up on this one. But instead it ripped up to the next pivot. And then this pink bar became a new pivot. So you almost don't need the old ones. Because this one became a new one. See that? And it's at the low, the swing low, we confirm here. The next bar pulls back into that new pivot and closes bullish. I don't have a star on it, but that's the one. And then look, this whole thing is a pivot. How is that dealt with? This entire range. Does that get retraced? This one becomes a pivot. And the very next bar gives us the entry with the star. We come back to it, hit it a second time. Oh, I see. They made another pivot. It's like, I thought we didn't have to do it a second time. So it's got to get over that with a bar that's not pink. That's not good enough. That is. Okay, now pull back into there should do it. Oh, don't not pull back. That's too bad. I would have been too conservative there. Okay, now this is a pivot. And it's a big one. We break under it. Do we come back into it? We do. Boom. Enter, I guess. This one also became a pivot, so I should be able to just move this down. Looks like they don't often hold. You don't need to keep them there. Oh, but look at this. It came back to this one. Oh, it made a new one. Yeah, it seems like it prints a new one for you. So now I need a pullback and a... Oh, but there's the bearish pullback. This was the bearish pivot. That's the bearish entry. Let's see if it breaks through here. See? It uses this one. I can just get rid of this. Most of the time, it looks like it works once. And then you get a new one to print. You can see now this one becomes a pivot right here. So I don't even think I need to keep them. Yeah, and then look, that if you tried to keep the old one, you'd get short there, and then but the most recent one was actually here. And you've broken over that with a bull bar, pulled back into it, and gotten an aggressive signal. Pretty sure that's bullish again. Uh-oh. See, now that it's consolidating, look what's happening. See what's happening? So the lows have indicators. The highs have indicators, right? Highs have indicators. It's a sign that we're going sideways. And what's going to end up happening is these signals confirm on a breakout and a pullback and a bounce. That doesn't really work very well in consolidation. Because if I got long here and short here, I'm basically break even. Right? So that time you only needed two. So you break even once and then you get short. So the hard part is identifying that this is consolidation to the short side. But we had one big clue, and that is that all of a sudden we started getting pivots at the high, but not at the low. See, no pivot at the low for the buyers to potentially bounce off of, but a pivot at the high for the bears to bounce off of. Pivot at the nope, that's it. That'd be it. Yeah, that's the only one. Oh, this one. Purple bar was a pivot too. Oh wow. That aligns pretty nicely. So yeah, that's that. Any questions? Is there something you want to see me do with it? Otherwise, I'm gonna get some sleep. But that's the new pressure point indicator. It's still being tested. I have not done enough, extensive testing to know how often this works. But there is no doubt when you know the trend, it identifies very clear spots for pullback entries. Just like that. Over and over and over again. And then even if it's just the low, it's this and this. Once you've broken over it, pulling back in and bouncing seems to do it. Right there. And then we probably had another one. Yep, this was one right here. Right here. Pivot. Entry. Entry. So when you're not bullish yet, you're not going to get the clear breakout first. It's just going to sit there in the pivot and you're going to get the signal, but it's going to be early. Now, like I said, I've got other ways to catch this, like purple bar, green bar, iron, and the trap back in. I know, I guess it didn't quite trap, did it? It didn't trap, but it's still the 2-bar combo. But even if I didn't get it, right, once I've gotten that, this becomes an entry because it pulled back and bounced off of that pivot that developed. Actually, the most recent one was here, right? So if you missed, and even if you missed that, you got it. When this one hit, you get it there. Yep, and then look, that one is one. So did they retest? Right there. There's another one, same thing. The low. So now you can see it's bearish, right? So keep that in mind. 1, 2, it's the purple bars. So the biggest mistake you could make is buying this because you think it's bullish and it technically got out of the pivot, came back in and broke out. The easiest way to keep that from happening is to only trade with the trend using that signal and not worry about the low, right? And instead wait until it breaks out and then you can start looking for longs. Because yeah, in consolidation I was having a really hard time even like before, but I think I see now why. It's just a matter of knowing the trend, and when the trend is not confirmed, you're going to have markers showing up at the highs, for instance, when it's not definitely bearish, right? And then here we didn't get a marker at the low. Not surprisingly, we break out this way, test and bounce. Yep. But like this action's where it gets tricky. If you tried to just use this, you'd be like, okay, I broke out, so I guess I'll buy this. But then it doesn't keep going. So it does not work as well when you're seeing these at the highs and the lows, probably time to back off. But when it does that and breaks out, I know where to look for my entry. Right? 1, 2, 3. Break out. Come back. Bounce. That one doesn't give you much, but that's how it works. Comes back into here. This one went bearish. And then we have another one here. Bearish entry. Yeah. So when it's unconfirmed on direction like this, you'd have to be real aware. And that's where it would get tricky. But if you know your direction, like all of this is like, you can't buy into support. I mean, you can't buy into resistance or sell into support still. All that stuff still matters. It's not superseding the chart. But if you already knew, like this is not going to work very well. But if you already knew, okay, I broke down underneath support, if only I could get short. Well, now I know, okay, well, I just need to get a pullback somewhere in here. So let's see if we can break down and pull back, and they can't break under it. So I'm not bearish anymore? Or do I wait for this one? I wait for this one. Yep. So the old one still works as long as, see, it never got tested. See that? This one here never got tested. Comes back, bang. Because he got trapped. The buyers there got trapped. Remember, when there's no marker here, it means they had to work hard. Why do sellers have to work hard? Because buyers are absorbing. When they go under that, they can't get through it anymore. Okay, that's how it works. So I will keep you all updated on how it's going. Primarily going to be using it on trend days. I'm not going to, stop doing what I've already been doing, but it worked just beautifully in the last 30 minutes today. Just amazing. My exit was good. So here, this was the low, which we didn't know till the next bar, but then this was the pivot, right? And we've gotten over it. So where's the next pivot? Here. So if price can get over that, it can bounce right away. If price can't get over that, it could bounce here, but it's probably consolidating. Yellow on the bottom, green on the top. It's probably consolidating. So I wouldn't get all hyper bullish. But if I did want to look for a buy, those are the locations I might want to make sure hold. I think that's the way to think about it. All right, I will leave this up on YouTube. I hope that people found it informative. Like I said, while I want everybody to succeed, I'm not going to share exactly how I built it, but all I'm doing is I'm taking things I already know, and I'm saying that's kind of related to this, and I wonder what happens when this happens, but that one doesn't. Let's see what it looks like visually, right? And so this will probably change. I'll probably make the actual signal, like the pivot or the retrace into the pivot, I'll make that into a color or something, right? But for now, I just want to see the actual raw data so that I don't miss any obvious patterns. And there probably are more. I might be able to find more patterns to use maybe during consolidation or something. I don't know. But the way I do this is I have an idea, I put it together, I look for the pattern, I see if it works, and if it works, I hammer it to hell until I've made enough money to basically pay me for all the time it takes to develop all this stuff. And then if I want to keep looking at that indicator for some other ideas, I will. Otherwise, what usually happens is I get another idea and I start to build that one. And at this point, I've got so many that there's many of them I don't even really use anymore because I know which ones are best, and so this might be one of those situations where it totally works, but it might not work as well as something else I'm already doing, in which case it just gets shelved, you know. But for sure, it's nice to have something. If it's consistent during trend days, it would be just fantastic to have a spot to know where to add on the trend days, because that's really that's a big challenge for me. So I'm excited if this does actually work, and like I said, I'll keep everybody updated and let you know.